Economic problems surround us, and the stock market is simply ignoring it. The worse things get, the more the Fed will pump the markets. When the Fed is questioned about their actions, it's always softballs and purposely wasting time to prevent real questions from slipping out. Nobody must question the true narrative of why the Fed is doing what they do in the first place when their dual mandate can't be resolved by their actions. But I guess who cares, right? You came here for the truth, so let me unveil that for you. This is not a channel for you to build your portfolio. It's not going to say this is step 1, 2, and 3, buy this stock ABC, and you are going to make this much money. It's so easy, get rich quick, and all that nonsense. I'm here to teach you the truth. I'm here to look at all of the insides of what's actually going on. And with all of that, you're going to build the knowledge you need to ask the right questions, to make the right decisions with your money, with the things that you do in your personal life, your family, your preparations, all of that. Let's get into it. I showed you the ADP numbers that had come out, and now we get the ones from the government. Economy sees job loss in December for the first time in 8 months. Of course, this was expected because of the conditions that are currently taking place, leading from, earlier in 2020 up until today. It had seemed as though March kind of dropped off a cliff and then things were starting to pick back up, but it looks like the trend is starting to slow down again. It depends on where you are. You have to look at it like this, but generally that's the trend. It's been moving. The numbers, of course, are still early. You got to look at where this goes over the next month and the next month. It probably will continue to decline as the months go on, but maybe when we move into spring and summer, that might turn up. I don't really know, but I'm just showing you what we've got so far. And this issue here is also taking place in other areas. I'll show you Canada in a second. But eventually, this is just showing us what's happening when you have all the shutdowns and all of this. You cannot have an economy that persists in this physical form, the retail locations, the offices, and so on, if people aren't there. Jobs added by industry November 20th and December 20th. You could look down at the bottom, see the legend. The pink color is November, the black is December. And you can go through. Leisure and hospitality was definitely by far the one that was hit the hardest. Obviously, everybody knows this is the industry that's been taking a beating. It doesn't surprise me though when you're seeing the airlines and you're seeing the hotels and everybody else that's interconnected with that surely is dealing with this unfortunate thing that's been going on for basically now about a year. And that doesn't look good for the near future either. Maybe by summertime, things might be different, but we don't really know what's going to occur with that. Whatever they decide to happen, we'll see. Waiter and bartender jobs clearly were hit very hard. There's just the numbers that correspond to that. Of course, if the restaurants are closed, if the bars are closed, not going to have any jobs. Bloomberg reported this information here. They dug into the numbers deeper, and you could look. Apparel manufacturing seems to be up a little. Couriers and messengers, that's obviously one that's very in need today. Looking at petroleum and coal products and so on, all those are positive, but the expected ones are in the negative. Food services and drinking places. Look at the bars, look at the restaurants, leisure and hospitality clearly, and just goes on. It's just something that we are seeing not just in one area, but you look all over the world, tends to be the major cities which have been hit very hard. Same things going on in Canada, Europe, Australia, and so on. Regardless of what's happening with the jobs, you can see in this article right here, the worse things get, the more they're going to print. Right here, job losses mean more stimulus. And that's what they want. Expecting $2,000 paycheck to be sent out to everybody. That's going to make its way into the markets because a lot of people who don't need the money will get it. They're going to go out there and buy PlayStations. They're going to go out there and put their stimmy, as they call it, stimmy, into the Robinhood accounts or the TD accounts or wherever it is, and they're going to give that money to Apple and Amazon and Tesla and so on. So that's your tax dollars going to work, use to prop up all of these companies. It's somehow not surprising, but here we are. They're just trying to go into it deeper here, but the point I want to make is that what they're doing is all relative to what they're seeing in the economy, and yet it doesn't help the economy. That's my whole point. Everything they have done has made it worse in every way. You look at the stats, basically everything across the board has looked very, very bad. Take a look at the United States balance of trade. Over the course of 2020, this stat had become significantly worse. This is a 10-year chart going back, looking very bad. And you could see that ultimately nobody cares at this point because, hey, all you got to do is print our way out of this mess. It doesn't matter what it is. Just print more money and somehow that's going to resolve it. And now with all of this stimulus that's been sloshing around, you could see that basically everything is starting to feel the effects of it. And this goes for the positive factors, goes for negative factors as well. And you could see right now, Wall Street is the most bullish on commodities in a decade. Wagers that 19 materials will rally at the highest since 2011. I am interested to see where this goes. Reminds me a lot of what we saw in 2008, where commodities were, for no reason, they were spiking like crazy. You can come up with any excuse you want, but at the rate that this was happening, for the most part, didn't make sense. It's, of course, a good thing to see that it moves in a good general upward direction, particularly if you have investments in it. But to see something spike straight up, it just really doesn't end well. It doesn't matter what it is. If it's oil hitting $140, $150 a barrel, if it's stocks, if it's anything, you want to see a slow and steady rise. You want things to catch up. You want to look at that 200-day moving average and see it being a natural movement that's taking place along with the market fluctuations. But when we get these things that are completely out of sync and out of whack, then it starts to hurt some people. And that's unfortunate. What they're looking at now is that tech stocks may not be quite as attractive as some of the others that haven't done well throughout the period or haven't done as well as those tech stocks. So the money is starting to move around, starting to go into different places. Not saying that tech stocks are not going to do good. Obviously, they will continue to perform as more money is injected into them. But I'm noticing that a lot of the stocks in which the people are putting their money, investors are putting their money, seems to be outside of that trend that we saw, especially earlier on in 2020. Before I move on to what's going on with the central banks, I've got some indicators to show you as well. I just want to cover the fact that Canada, same situation with the jobs. Canada loses jobs for the first time since April. The economy shed 63,000 positions. Unemployment rate ticks up. You can look at the statistics. They're never going to make any sense. I mean, if you take a look at this right here, 8.6%, 8.6%, now that I butchered that down there, 8.6%, it doesn't make any sense at all. When you look at how many businesses are shut down, it's ridiculous. Look at the unemployment rate for the United States. I mean, pretty soon they're going to get that down to, let's say, negative 1%. They'll probably get it down into the negative. It will be there. Nobody will say it's weird. Nobody will say anything about it. They're not going to. None of the analysts will say that. They'll say, hey, this is a historic low in the unemployment rate. And of course, this is done by the Lord and Savior, Jerome Powell. Well, of course, this is ridiculous. And I'm trying to make a point here that it does not actually matter what the unemployment rate they give you, whether that's a U3 unemployment rate, whether you're looking at the equivalent in all the other countries. They're never going to actually factor in reality. It's nonsense. It's quite garbage, but I just want to show you what's happening as it relates to that and then the actions that they take. It's not necessarily, people ask, why do I even cover the government statistics if they're all fake? You're a liar, you're a phony, you're garbage, and so on. This just shows you what they put out there and then the actions that they take as a result. So I'm trying to analyze that information, how it connects in with each other, not necessarily if it's 8.6% or if it's 6.8%. It really doesn't matter. Rich Americans are bracing for higher taxes. Of course, this is the expectation, and it looks like this will be the case. I don't know exactly what kind of taxes will be passed, but look, you spend a lot of money. You increase the deficits. You start pumping money out there in every single way. Look at the M1 money stock. Look at the M2. Look at what's happening with individuals and what they've been receiving, the stimulus checks. They're going out there and trying to pay off their bills. For some people, they're desperate. They need that money. Other people are using their stimmy to buy Tesla stock on the Robinhood app. And actually, I saw another one where Elon Musk, check this out. Elon Musk said, use the app Signal, okay? And that is supposedly a high security. I believe even Edward Snowden promoted that as well. Use the app Signal. Individuals looked on the Robinhood app and found a company named Signal. Okay, it's not the same Signal. They bought it, sent the stock soaring. Sent the stock soaring. It wasn't even the right one. That's the kind of investment that we're talking about today. Anyway, going back to this point here, before I went on my tangent, looking at higher taxes is inevitable because this is what they want to do. This is what they are always trying to do, to increase taxes, and they'll do it. Okay, don't worry. It's only going to be on the wealthy. That's right, the wealthy. The wealthy. Sure. We may have heard that one before in 1913. We may have heard that one before in the years following, every single year after that, but surely not this time. The U.S. Central Bank may begin paring back its bond buying program as soon as the end of this year, according to the Federal Reserve Bank of Philadelphia President Patrick Harker. It's nonsense, but I know that I just covered this. I think it was yesterday's video, maybe the day before, that the Federal Reserve supposedly later on, way down the road, they're going to start cutting back on their bond buying, right? Well, let me read you the quote. I could see potentially that occurring at the very end of 2021 or early 2022. It's all going to depend on the course of the economy. It could cause disruption in the markets if we try to do it too soon. So you've got this information, right? Now, let me show you something else. The Dallas Fed President Kaplan had this to say. I worry that bond buying has some distorting impact on price discovery that they then encourage excessive risk-taking, and excessive risk-taking can create excesses and imbalances that can be difficult to deal with in the future. Wait a second, did we just get a little bit of truth from the Federal Reserve? Kaplan has said some other things that I thought was interesting over the years. I've brought them to you. This is just something that, yes, obviously, but here we are. Right here in this interview, they're talking about how money printing creates problems, and so that leads perfectly in from the previous information. Look at this. What are the ultimate consequences of permanent liquidity injections? We have stumbled into very unhealthy codependencies between central banks and investors, between central banks and debt issuers, which are governments and companies, and between central banks and politicians. A very unhealthy codependency. It's like a bad marriage. They've ended up relying on each other and so on. How long could this go on? Now look at this. I don't think central banks quite realize how much irresponsible risk-taking is going on. In 2010, for those who are watching, who are paying attention back in 2010, you'll remember this. Ben Bernanke talked about the benefits, costs, and risks that come with unconventional policy. He added the longer you maintain it, the lower the benefits, the higher the costs and the risks. That was 10 years ago. At the time, Bernanke was thinking of unconventional policy as an economic bridge. Now it has become a destination. What fools. If they were actually intending on fixing the problem, if they were actually trying to resolve the crisis, help it out, give it a boost, and then maintain everything and, kind of work their way off, they have failed tremendously. But of course, I don't agree with that. There's something else more sinister going on. Valuation extremes, S&P 500 index, that's the blue area. And then you look at the red bars, number of components trading greater than 10 times the sales. The revenue is something that you should be able to track a stock with, looking at what they're doing, but today it means nothing. Going back, you see the one spike here, that's the year 2000. You remember that, dot-com boom and bust. And you look at what's happening today. Same situation, except it's going to record highs. I'll show you some more record highs in just a second. But of course, it's going to continue. It's going to continue for the foreseeable future until this pops. And you're going to see every record broken. S&P 500 index price to sales ratio, that's at a record high today. And the Russell 2000 has never been this distorted from the 200-day moving average in history. Ever in history. How many times have I said that? Well, this is going to probably continue for a while, and who knows how long it's going to take to break that record, because it is going up, it's surging like crazy. You look at the stocks that make up the index, and it's just a straight line upward for so many. It's unbelievable. But this is the kind of world we live in today. Thanks, Federal Reserve. You've done a great job. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me by clicking a button on your screen. You can help the creator. Thank you very much. If you want to learn about selling stuff online, you want to learn how to make money and actually create a business, you can do that at the AmazonGPS.com for free, by the way. If you want to learn how to, everything basically related to the financial system, and then ask the right questions, you can go to my 2 books, check them out, link in description. If you want the audiobook instead, themoneygps.com. But hold on a second. Have you seen this video? If not, you definitely want to check it out. Click it and I'll see you there.